Hello everyone, Warren Buffett's company, Berkshire Hathaway, is selling massive amounts of Apple stock yet again. Just last Saturday, Berkshire reported selling another 100 million shares in the tech company in its earnings report, or around 25% of Buffett's position going into the third quarter. That's on top of selling around 50% of his original position in the company in the second quarter of 2024, just before this one. That means Warren has now gone from owning 900 million shares in Apple at the start of 2024 to just 300 million in the month of November. So why is Berkshire selling so much of Apple when it's reaching all-time highs recently? Today we'll be diving into the reasons why. We're going to be talking through the sales Berkshire Hathaway have made in this earnings report, as well as the earnings report itself. We're going to talk through the reasons Warren himself has offered up in interviews in the past for selling out of Apple, and then look through the fundamentals of Apple as a business and offer an alternative reason that Warren might be selling out of this position. So don't forget, if you like this sort of content, then please feel free to subscribe to the channel to not miss out on any future videos. Let's kick it off then. So over the last weekend, we got an update in earnings from Warren Buffett's company, Berkshire Hathaway, in which they reported their profits for this quarter of 2024. Which revealed a number of things about what the company is doing and what Warren Buffett's portfolio is looking like coming out of Q3 earnings. The first being they reported operating profit decline of about 6%, which missed analyst estimates more than likely due to underwriting losses of older insurance policies and insurance claims surrounding Hurricane Helena in September of this year. Additionally, Berkshire was a net seller of stocks, buying only around $1.5 billion worth of stock and selling around $36.1 billion of their public holdings. This takes their cash position to a record high for the company at $325 billion over the last quarter reports on their cash position of around $270 billion. So that's a hell of a lot of money. And that's a lot of this additional funds has come from this 100 million shares sale of Apple. As we can see here on the 30th of September, they've said that they now have around $69.9 billion worth of Apple and $31.7 billion worth of Bank of America. Now, if we compare that to the share price of Apple on that date of the 30th of September, the share price sat at an all-time high of $233. So if we divide $690.9 billion by this number, that we get to around about 300 million shares that Berkshire still owns. So Berkshire still has 300 million shares of Apple as of around about the end of September. But we can see in July, going into the end of Q2, in their 13F filings, they had 400 million. So 100 million have been sold by Berkshire in Q3 earnings. And we don't really know when they've sold this, and we won't know until the 13F filing is put in for Berkshire Hathaway. But we can make some inferences. So that $233, if we times that by 100 million times, so obviously the number of shares that have been sold, that gives us a cash balance of $23.3 billion. So Buffett has sold around about $23.3 billion worth of Apple stock in the third quarter of 2024, which is around about 25% of his position going into Q3 earnings. Now, it's worth noting that he also sold a considerable amount of Bank of America stock. Now, the share price of that on the 30th of September was $39.68. $31.7 billion worth of that stock divided by that share price gives us around 800 million shares of Bank of America that are still owned by Berkshire Hathaway, which means they've sold around £8 billion worth of Bank of America shares, or around 200 million, which is around about 20% of their overall Bank of America position. So he's selling out of both Apple and Bank of America by similar amounts, 25% and 20%. Obviously, Apple's worth a considerable amount more. And finally, we now have for the first time this year that basically Berkshire Hathaway hasn't bought back any stocks. They've done no share repurchases over the Q3 period. And that might give us an insight into the view Berkshire has on its own shares and their own valuation, because they're not buying any back. So they might be thinking their shares are a little bit pricey right now. So we have Berkshire selling out of these two positions. And why is that? Well, Warren's talked about this last quarter when he sold around 50% of his Apple position then. And this is what he said.
We will end up, unless something dramatically happens that really changes capital allocation, a strategy. We will have Apple as our largest investment, but I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive. And one thing that may surprise you, but almost everybody I know pays a lot more attention to not paying taxes than I think they should. We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year. And the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give. And I think that higher taxes are quite likely. And the government wants to take a greater share of your income or mine or Berkshire's, they can do it.
So is this the main reason we are seeing Warren Buffett sell a lot of his Apple shares? Well, I believe it's probably a consideration, but it's probably not the sole reason. The main reason for that is because when we look at historical fundamentals, how the business has grown and how the share price has also grown, we get a bit of a clearer picture on why Apple is maybe looking quite expensive right now. When Warren first started buying Apple, it was back in January 2016, around about 8 years ago. Now the share price was sitting at $24 per share and had a price to free cash flow of around 8 to 9 times. Effectively, we had 8 to 9 years at that share price before the free cash flow, seeing no yield whatsoever, would pay off that share price and justify its valuation. Now that's just incredibly low. He's held it for around 8 years, which is ironic enough. And in that time, there's had a massive margin expansion as people got excited to own Apple. Now the share price sits at close to $220 per share, or around 31 times price to free cash flow at current levels. So without any growth, we would have to wait 31 years to receive back a justification for this current share price. So what we have seen is that over the past 8 years, the share price has outpaced the Apple's growth of free cash flow specifically, which is often used in DCF models to work out valuations for stocks. To me, this is a massive big red flag. It adds in the fact that Apple's not seeing much growth at the moment. it remains pretty bleak on that front, with revenue up around 6% this quarter year over year. So Apple's a fantastic business. They've got an amazing moat and a massive chokehold on the iPhone sales. But we have to believe that the sale by Buffett isn't just tax-based if we're looking at this, in my opinion. It could be that it's just getting uncomfortable owning a stock that he's seen as being quite expensive comparative to its growth prospects. To me, selling over 66% of a position that was very high weighting in his portfolio in 1 year is more than just because of tax implications. I think it's a bit more to do with the valuation that Apple is seeing next to its fundamentals. And if we add in the fact that Warren is now 94, we can actually infer that he's probably very happy with this position and the amount of gains he's received on it. It's probably been the best buy of his career, and who can blame him for taking some gains? So that's about it from me, guys. Personally, I think Apple is a bit overvalued right now, and that is weighing on the reason for Warren Buffett maybe selling out of the position. But what do you guys think? Let me know down below. And as always, thank you for watching. I do appreciate it, and I'll catch you in the next one.